Good afternoon and thank you all for joining us on this edition of Business Today. Today is the 21st of April 2016. My name is Joy Doreen Bira. And on the show today, we're going to be paying some special attention to compliance to regulations or legal frameworks for businesses in Kenya. And today we're going to be speaking to the Chief Executive Officer for the Kenya Association of Manufacturers, that is Phyllis Wakiaga, who's going to be talking to us about how exactly the industry is doing and whether or not companies are complying to the legal framework for which they're meant to meet, that is in regard to their obligations. And also a little later, we're going to be speaking to Anne Gordon and Mike Serko, who are from the major project here in Kenya. They're going to be talking to us as well about capacity building for SMEs and also agribusiness and a whole lot of other issues to do with trade in the country today and how exactly we can uplift small and medium enterprises in Kenya today. So do stay tuned for that. But first, let's start by taking you through our Twitter poll question. And this afternoon, we did ask you whether or not you are satisfied with the services offered by your bank. Are you satisfied with the services offered by your bank? And we're going to be looking at some of the Twitter poll results that we are looking at, because some of the options we gave you were whether or not you thought the services were excellent, good, fair, or wanting. And as at 2 p.m., we were looking at a number of interesting results here, where someone was saying, you know, I don't think banks really give excellent services. So if you look at the results, excellent was at about 20%, good was at about 33%, fair was at about 23%, and those who thought that their banking services were wanting are 24%. So it's a bit of mixed reactions here in regard to the kind of services that Kenyans do receive from their favorite or banks of choice. Let's now take you into our top stories here in business. Hundreds of thousands of Kenyans who have been caught in despair over the last 2 weeks after Chase Bank was placed under receivership could actually now see a ray of hope that they will get some of their money next week. The Central Bank of Kenya announced the troubled bank will indeed reopen and depositors will access their money up to a maximum of 1 million shillings. But as fate gave to Chase Bank customers with one hand, it also appeared to take from Imperial Bank customers with another hand, as court in Mombasa stopped Imperial Bank from paying depositors until a petition by billionaire Ashok Doshi is heard.
The shedding of tears and gnashing of teeth by customers of Chase Bank could reduce soon, at least for those who had less than 1 million shillings in their accounts.
Agreed upon today at 8:30 this morning, between KDIC, which is the receiver, with KCB Bank Kenya Limited, which I'll just call KCB, on modalities to reopen Chase Bank in receivership in the next few days.
It will be a big relief for at least 167,000 customers who will now be able to access 100% of their deposits. There were immediate reactions from Kenyans following this directive.
Kama banki kubwa kama hii inaweza kufungwa, hiyo ni shida hata kwetu, tutakuwa na imani na banki.
But the rich will still cry for a while longer, as those with more than 1 million shillings in their accounts at the time Chase Bank went into receivership will still have to wait, as they can only access up to a maximum of 1 million shillings.
We will provide liquidity to make sure that this works.
Chase Bank had been placed under receivership through the Kenya Deposit Insurance Corporation as the receiver managers after Chase Bank's failure to meet its financial obligations. A situation that seems to be repeating itself as Imperial Bank's top customers are still to receive portions of their deposits.
Hizo benki ndogo zimefanya hata watu wa chini kabisa tumejua mambo ya pesa kwa kuweka kwa bank, kuchukua loan. Sasa Chase Bank imeaibisha benki ndogo.
In a related development, a top Imperial Bank customer, Ashok Doshi, has secured orders barring Imperial Bank from paying depositors until his case is heard next month. Ashok argues that the payment scheme adopted by Central Bank of Kenya, allowing access to only a maximum of 1 million shillings, was denying depositors the right to their money. Ashok has at least 1 billion shillings in Imperial Bank. Abi Agina, KTN News.
And now we are joined by Karithi Murimi, who is an economist, joining us via phone to tell us what exactly this means now that there could be a ray of hope for Chase Bank depositors. Thank you so much for joining us, Karithi. Kindly, if you may, knowing that the Central Bank of Kenya now says that Chase Bank could be reopening, what exactly should we expect going forward?
The three areas which are key is that opening will happen on 27th, that's a fact. Payment in terms of anybody with $1 million and below is also assured 100%. But going forward, which is the third issue, is that KCB as an interested investor has been around to do what we call due diligence. That basically means, in simple language, looking at the loan book, looking at the type of quality of those loans to confirm whether they are happy that they can buy the bank. If they agree, Central Bank has told them they can take a majority stake.
All right, so we've also seen the fact that the Central Bank and Treasury are agreeing with bank consolidation. Do you think that going forward we're going to see a number of mergers and a number of banks as well, coming together and forming bigger banks?
With what Chase Bank and KCB will be basically doing, it will open opportunities for others to think in the similar way. And most likely, instead of waiting until a problem comes, you may have what we call willing seller, willing buyer negotiation.
Yeah.
Because what KCB is basically doing is to smell an opportunity in SME market, and they are seeing an opportunity to go into Chase Bank for that particular exploitation. So it's what in business language we call a penetration strategy. They are trying to penetrate SME, and they have found Chase Bank is a good opportunity for that particular activity.
All right.
So I see the same with other banks, because it's not a secret. Equity was also interested in Chase Bank. So I smell that being up there as part of the card for the major banks.
All right, when you look at what exactly is going on or what has transpired the past 2 weeks, one would actually think that a number of depositors are afraid that this could repeat itself in the near future. But what do banks need to do to ensure that what we saw happen to Chase Bank doesn't happen to other banks or other smaller banks in this case?
What should happen in a very urgent way is Central Bank, the rights of CMA should in a very serious way come together to propose what I would call a governance act to coordinate what is allowed and not allowed for board of directors and the senior management in the bank. Because when you read the Chase Bank story, it's basically careless reading, is breaking the law applied, because you don't do insider rating just like that. So I see a need for very urgent intervention by the law. And because Parliament is currently talking about interest rates and all those type of regulations in the spirit of controlling banks, I think the regulators, that is now CMA and the Central Bank, should kind of very quickly take the opportunity to get the Committee of Parliament in charge of the bank,
Right.
to draft a new regulation for governing banks, especially the director, especially getting the right quality of board members, and borrowing a bit of U.S. experience, where if you substantively own a big stake, it doesn't necessarily mean you should be allowed to give a big number of board members. Because part of the practices we are experiencing is a misuse of what we call the brew club, where people who know each other become board members. Therefore, in the boardroom, there is technically no big oversight.
Okay. All right. And my final question to you right now would be, For all the depositors out there who maybe are not exactly certain with, when it comes to trusting banks or financial institutions, do you think that right now would be the best time to even start talking about the issue of mobile money as opposed to banking institutions, or do we say fully fledged banking institutions?
I think it's both, because as mobile money grows, it doesn't grow outside banking, it grows inside banking. In other words, for you to route your Mupesa as an agent, for you to disperse to other ordinary customers of Mupesa, you need a bank account. So we need both to be strong, because the technology is what you call virtual, which is the mobile, but the physical management of cash is still a banking activity. So that's why I'm saying, when we think the Governance Act, the new thinking that should come is also to do with how to manage that other area. And the other key point which Kenyans need to debate very, very carefully is what information should banks, through the regulator, release to them, so that every so often you're actually almost aware of what is inside that bank. So the quality of financial reporting, whether we make it quarterly, is a key thing that we need to make.
All right.
And then the Treasury also and the regulators in terms of financial sector in total need to ask, how do you cross-refer each other's information so that you don't have a repeat of bad boys mixing everybody all over. Because if you look at some of those people not repaying loans, which are making the banks become bad, you may find those names are similar all over. Yeah.
Well, thank you so much, Karithi. That
you.
is economist Karithi Murimi talking to us about the latest developments coming from the Central Bank of Kenya and what exactly it could mean for Kenyans, and that is depositors and anyone who has a bank account with any of the banks around the country. Well, let's now take a look at other stories. And Standard Chartered Bank and national carrier Kenya Airways have been dropped from the NSE top 20 share index and will be replaced by Diamond Trust Bank and CIC Insurance Group. Last year, Stanchart share was the worst performing among the 11 listed banks, and according to Standard Investment Bank analysis, the counter lost about 41.8% of its share price, while KQ counter shed off its value due to negative corporate reports leading to erosion of its price gains. The market index is periodically reviewed to ensure it reflects accurate picture of market performance. FastJet is looking to become the continent's first low-cost Pan-African airline, and the operation was initially created with the acquisition of Fly540, an airline operating in East Africa. Flights in FastJet's own name commenced in November of 2012 in Tanzania and now spreading to the Nairobi route to satisfy local ownership and other requirements. The current strategy is to create locally incorporated airlines to operate services using a common branding, operational standards and sales platform. Now, I happen to speak to FastJet's general manager, that is John Course, on the airline's goals.
FastJet is a low-cost carrier, and it is developing the model of low-cost carriers which has been in existence in Europe and America for many years, but it's new to our continent. So we're taking that model and adapting it for the African aviation market, and so far we have increased up to 4 aircraft now, flying as far south as Joburg and as far north as Nairobi and as far west as Entebbe. We have 4 aircraft of one type. One of the cornerstones of the low-cost carrier model is to have one aircraft type, because that vastly simplifies all of the regulation, training, certification, operating manuals and everything. They are all for one aircraft type. So part of the game is simplicity. We have ambitious growth plans, and of course to grow it costs money, particularly in aviation. So if you were to review the accounts of our major investor, which is Fastjet PLC on the London Stock Exchange, you'll see that so far we've not yet made a profit. But we're hoping to break even this year and move into profitability from next year onwards. Obviously, it's earlier in the year and I don't have a crystal ball, but we are consolidating the business. Now we're going through a phase of just trying to prove that the model works financially before going into our next growth phase.
You're watching Business Today. We'll now take a short break. When we return, we're going to be speaking to Phyllis Wakiaga, who is the CEO of the Kenya Association of Manufacturers, on anti-corruption compliance. Do stay with us.